I'm a moron, baby. Woo! I'm stupid. Da, 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 da. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. Links in the description. And apparently, I've been investing the wrong way this entire time. Now, as y'all know, because I say it in every freaking video that I make, well, almost every video, unless I'm making fun of Meat Breath or Jeremy LaFoo-Foo. In almost every video, I tell you that I own the Vanguard Total World Stock Market Index ETF because I believe owning index funds, broadly diversified global index funds, and buying them consistently via dollar cost averaging and tax advantage accounts is the true way to build long-term wealth. But I actually read my comments, ladies and gentlemen. This may shock you. I actually read my comments. I don't have time to answer a lot of them, but I read them. Sometimes up till 3 in the morning. Probably the same time that Jeremy's putting in his buy orders. And I see all these comments calling me a moron because VT has apparently underperformed a lot of different other ETFs. What shocked me, I thought VT was the highest performing ETF to ever exist. That's why I bought it, right? I mean, obviously. All you gotta do is go to an ETF website. Here I'm on ETF.com. Filter by the highest performing ETFs over the last 10 years. And then those are the ones you buy. Apparently VT was up here and then I don't know what happened. I guess it dropped. So I've decided to change my investing philosophy. Instead of buying VT, which is a global market cap weighted index where I grow my wealth with the world and I pay almost no fees and almost no taxes. Instead, I'm going to find a new ETF to put all of my money into. And I'm going to use the brilliant strategy that all of you clowns seem to use, which is to go to ETF.com, filter on the highest performing ETF, and then buy that ETF. You're such a freaking genius. Wow. So here we are. Got a couple ETFs I pulled up, and I filtered it by highest 10-year, I guess, compounded performance, okay? So we got a list of ETFs here that I'm going to consider buying. So let's go look at these. But before we do that, let's go look at the VT ETF. So here's my baby, the Vanguard Total World Stock ETF. Now, as you can see, over 10 years compounded, it's had a 10% compounded annual rate of return. So you would have more than doubled your money had you bought this 10 years ago. But that's boring. And there's better ETFs, right? And that's basically the return I've gotten. I've been investing since 2011. So I've basically doubled my money, at least on my initial purchases, since I started investing. But I'm just a loser. However, I decided to go on ETF.com. So let's go check these out, okay? The first one on the list is a Direxion Daily Semiconductor Bull 3X Shares ETF. Holy crap. Over the last 10 years, it has had a compounded annual rate of return of 51.98%. Those are Jeremy LaFoo-Foo returns right there. So let's go check it out. I'm really getting tempted to buy this. I mean, look, those returns are crazy. I mean, this is all you gotta do is just filter on the highest performing ETF. So, let's see. SOXL. SOXL by OXL. SOXL is an aggressive and bullish, it's always bullish, one-day bet on a concentrated portfolio, that sounds really interesting, of the 30th largest U.S.-listed semiconductor companies, including manufacturers and providers of services or equipment associated with semiconductors. So, looking at this, it seems to be highly diversified, okay? In one country and across 30 companies all in the same industry. But it's had a better return than VT, so it must be a better ETF. So, SOXL rebalances its 3x leverage. What does that mean? Isn't leverage like borrowing money to try to amplify your returns? Yeah, I mean, obviously it works because look at the returns of this fund. But that can also work going down as well. Wow. So, pretty tempting. Pretty tempting. And if you look here, it has an ESG liberal rating of AA. Okay, well, that's the first candidate. I like it so far. 51% compounded annual return. It went up 5.34% today. How much did VT go up? I think it went down today. I think it went down. I think it was flat or down a little bit. Man, I could have made 5% today. I am such an idiot. That's not risky at all, guys. The next one, TQQQ. Pro Shares Ultra Pro QQQ. Now, QQQ, the ETF by itself without the T, is the largest 100 non-financial stocks listed on the NASDAQ exchange. Yes, there's multiple stock exchanges. Noobs. Now, TQQ, I believe, is a leveraged ETF. So, as y'all know, that QQQ has been freaking crushing it, man. Large cap US tech. Woo, boy. So let's check this out. TQQ provides 3x leveraged exposure to a modified market cap weighted index tracking 100 of the largest non-financial firms listed on the NASDAQ. I actually knew that. Sometimes I forget what's in these indices. Okay. TQQ is a levered fund that delivers 3x exposure only over a one-day holding period. So it almost sounds like you don't even own the underlying stocks. Okay, I don't know exactly how they freaking run this thing, but wow. But I mean, look at those returns. And if you go over here, that expense ratio, I mean, that's less than 1. It's only 0.95%. That's a lot better than VT. What is VT's expense ratio? I believe they cut it. Where's it at? I think it's 0.07%. Where's the freaking expense ratio? Whatever. I think they cut it down to 0.07%. 0.07 versus 0.95. But those returns, though, you know what I'm saying? So, I can either own a semiconductor levered ETF, 51% returns, or TQQQ, 47% annual compounded returns. Let's see what else. Let's go down a little bit. So it looks like it's all semiconductors and tech. Obviously, the best strategy is just to buy tech because there's no possible way those could revert to the mean. I mean, obviously, things that have shot up massively over the last decade are only going to continue to do that forever and ever into the future. I'm an idiot. Let's see. Ooh, we have healthcare. I mean, healthcare is good. You like cure people and stuff. Cure. Direxion Daily Healthcare Bull 3X shares. Cure provides 3x levered exposure to market cap weighted subindex of the S&P 500 that tracks the performance of US listed healthcare companies. One country, one sector, 3x leverage. Tempting. Expense ratio 1.08%. Man, you guys really are freaking geniuses, okay? I thought that, you know, instead of gambling on highly levered 3x funds or just filtering on the highest performing fund, you actually stayed the course and bought a total rolled index and didn't try to time the market. Because what investors tend to do, I'm told, is buy the ETFs that have outperformed recently and they underperform the market because they're buying ETFs that eventually revert to the mean. It's like buying ARK when it went up to how high did ARK go? 150, 170? And now it's like, what, $50? Oh, ARK did good. So because ARK did good, I'm going to buy it. I'm so smart. And Strongman is so stupid. So, I mean, my whole philosophy is just falling apart before my eyes. What else do they have here? Jesus. It's all like levered ETFs. Wow. This is the future, ladies and gentlemen. So here's what I'm going to say to y'all, okay? You need to sell all your VT. Create a massive taxable event if you have it outside your tax advantage accounts, and just put all of your money into a broadly diversified portfolio of 3x levered semiconductors, 3x levered QQQ, 3x levered healthcare, and more. And that's how you're gonna get rich. Kind of sounds like the Dave Ramsey approach. Another genius. Anyway, what's the whole point of this whole video? I don't give a crap what you losers say about my ETF because I know I will outperform you. all you clowns do is look at past performance. And you say, well, if you had bought this one and held it for 10 years, you would have outperformed your stupid VT. Well, guess what? None of you freaking clowns have bought any of the ETFs or stocks that you talk about, okay? The one or two individuals that actually probably own these or made these kind of returns are one or two individuals, okay? The vast majority of people are probably looking at these now like, oh, they went up a lot, so I'm going to buy them. And that's the perfect time for them to get freaking decimated, okay? Because stoinks don't go up forever, especially if they're trading well above their intrinsic values. But you know what? Maybe I'm full of crap. I'm going to stick with VT, though. Cut the expense ratio. I, barely pay any taxes or no taxes on my tax advantage accounts. Double my money every 7 to 8 years, at least based on past performance. And I'm broadly diversified across the entire world. But I'm a loser. Anyway, that's it. Like, subscribe. Don't buy any stupid levered ETFs. That was a joke. Do something besides that. God, even if you like just the US, do VTI or something. Don't be an idiot. And you'll have a wonderful, delicious, superstitious, cacalicious night. Choo!